Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on the tech sector, Apple and Facebook. So the tech sector, bulls buying the gap down open in a very strong way. Nice uptick in bull volume and a close up at the high, hitting a higher high and maintaining the bulls in the driver's seat. So 52.65 is that high. We're looking for continuation with that strong close at the end of the week. And we'll be looking up towards 53 psychological resistance, as again, there is not resistance to be looking at here. We'll also have the weekly upper Bollinger Band. That's going to be up in the upper $52 range. So that will actually be a resistance level to watch. But you can see we've been closing back and forth with this level the past couple months. And whenever I see a resistance or support level, they keep seeing a lot of back and forth without a clear conviction of it acting as support or resistance. I don't put as much weight into it, so I wouldn't put a ton of weight into that upper Bollinger Band, but considering the strong move that we have been seeing, there's not much else to be looking at in terms of resistance, and our new support for higher lows to be maintained is 52.17, the low of Friday. So the bulls are still in very full control of the technology sector, and we saw that in Apple. Apple did break the higher low pattern, so for me personally, I would have exited a position that I was in as a bull just because that would have been my trade game plan. Exit when the higher low pattern breaks, and rather than giving in to emotions and making a decision on the fly, I would have stuck to that level and sold on Friday. But certainly a strong buying of the dip and a close at the high of the day, so if you determined that you wanted to stay in, I certainly wouldn't argue against that decision. So we close at the high of the day. The all-time high is 137.48. The bulls are maintaining momentum, and it too formed a new key level to be watching. The low of Friday, 135.28, is a key support going forward. Weekly time frame, potential bearish reversal candlestick, a little spinning top of indecision after such a big bull move. The weekly upper Bollinger Band next week is going to be up in the 136 range, the low 136s. So we'll have to keep an eye on that level, because if we do lose that upper Bollinger Band, consolidation will certainly be coming. Whether that will be normal, healthy consolidation or not remains to be seen, but I would certainly anticipate it to be normal and healthy considering where we have come from. So big time bull move, upper Bollinger Band key weekly support. A red week next week would confirm consolidation is coming, because that would lose the upper Bollinger Band weekly support. Facebook bulls bought the dip, very similar candlestick to SPY, very similar candlestick to the tech sector, so the correlation among the three is certainly very strong. And the bulls are remaining in control, maintaining higher lows. Key support to hold from here is 132.55, the low of the last consolidation. And now we have our higher low, 134.16. The middle Bollinger Band daily support continuing to hold. And we're just looking at resistance of 136.12 and the all-time high of 136.79. So the bulls should stay strong as long as the tech sector stays strong. A little bit of an upper wick of profit taking on the weekly time frame, but certainly not significant and not enough to be a bearish reversal candlestick. Bulls still looking good for continuation if we see the market and the tech sector hold up, which they certainly did very well at the end of the day on Friday, with a lot of bull momentum heading into next week, looking for new all-time highs. So that's what we're looking at. Tech sector still strong, and there's a very strong correlation right now between the tech sector and the S&P 500, so I don't think one's going to consolidate without the other. And if we do see that occur, like we did see that in the financial sector consolidating without the S&P 500 consolidating, that would mean that money is rotating into other sectors to continue to prop up the S&P 500. So Facebook bulls in control, Apple bulls in control. New support levels to be watching, the lows of Friday. The bulls certainly bought those dips. And we'll check back in on Monday. I hope you have a great weekend.